But with that said, though, our last story for today, we're going to be talking about the State of Crypto Summit with Coinbase. So this happened earlier this week. Q2 2025 State of Crypto report just dropped. TLDR, the world loves stablecoins. This has been from Coinbase on Twitter. We'll leave the link as well. Most links will be in the description as far as relevance to what we're covering today. So we'll leave this post because there actually covers, it's a thread talking about, well, they leave a link talking about more on what actually happened at the State of Crypto. You can also see some of the comments for relevance to how people are reacting. I like how in their story here for the thread, they talked about, or they showcase 161 million stablecoin holders. Like a lot of people individually are holding stablecoins, which is more than which is more than the 10 largest cities in the world combined. That's kind of amazing.
That's crazy. Yeah, and then the other things that they really mentioned, stablecoins is a big thing. It's like it's stablecoins, and I finally understand it after we went to consensus because I didn't quite understand it then. It's stablecoin payments are going to become invisible. They're going to be embedded platforms that everyone trusts. It's going to be the infrastructure and the technology upgrade for the financial system that's largely been built in the 50s. Stripe is looking at stable coins. Coinbase has their base stuff. It's an L2. It offers instant settlements, fees near zero. Shopify now accepts stable coins in their options now, which is huge. They're the biggest e-commerce platform on the internet right now. I think they take up 34% of all e-commerce or all internet traffic. I'm not sure what percentage of e-commerce they take, but it's going to be a huge shift because I'm going to be able to instantly transfer money to you, and really it's going to be a stable coin that probably does the instant transfer. We won't notice that it's anything different than regular money at some point, but it's going to be a huge thing. There's also the fact that you've got the Financial Innovation Technology Act, all that stuff passing. You've got regulatory clarity. More companies are jumping into Bitcoin. And then the other cool facts here is that Coinbase did a lot of polling. 3 in 5 Americans believe the current financial system is outdated. No doubt, you can't transfer money to somebody without using Zelle or Venmo or PayPal. That it's dumb. 51 million Americans own crypto, and to kind of frame that, I believe there's 320 million Americans. 150 are adults that are able to work. Pay taxes, all that. So a third of Americans that are working, that are adults, own crypto. And then it's not a political ideological line. Democrats and Republican voters agree we need more financial innovation.
We do.
So it's not a partisan issue. It's a generational one. The stats skew way younger when you look at it. But again, this is just huge thing. You see convergence on AI and on-chain data. We just talked about it. AIX and Polymarket. NFTs are becoming a thing. Their identity, their credentials, their access. You buy a car, your title is a NFT that's unique to you. And then prediction markets are integrated into financial forecasting. It's crypto isn't a sidecar. It's part of the engine, just like AI is a feature on there. And then what was the stat? There was a stat that 54% of all Fortune 500 companies are adding crypto into their stack or something, right?
Yeah. So if you follow this, we'll leave this link again. There's a link in the thread here that covers the full story in Coinbase website, and it's called "The State of Crypto: The Future of Money is Here." And what I like about Coinbase, they're actually really good at kind of portraying and interpreting data, for context. So in Coinbase, in consensus, we covered how Coinbase actually got adopted into the S&P 500. So my theory is this is actually impacting a little bit, maybe influencing some of the other Fortune 500 companies with blockchain adoption. But to your point, Leon, so you were asking earlier, how does that data chart metric look like for Fortune 500 companies?
Yeah.
So this is again from the same website article. So Coinbase highlights how nearly 1 in 5 of Fortune 500 companies or executives say on-chain initiatives are a key part of their company's strategy moving forward, up to 47% year over year. So it is becoming a lot more rapid as far as the adoption and the conversations about adoption. It brings me back to 2021, where a lot of this was just speculative. It was becoming just trending because before 2021 or even 2020, a lot of people who knew about Bitcoin in general were like niche crowds,
They were early
maybe high,
adopters, very early
yeah,
adopters.
like geeks and
They
stuff.
were, yeah, like they were very. It's just like Minecraft when it was just a Java game, super beta. Like the early adopters there took it on. Like the early adopters of the internet when you didn't have Google search or anything. You just kind of found stuff based on random people, or even when Bitcoin, you couldn't buy it online. You have to go meet somebody in person, and they would give it to you. Like they're always very early adopters.
Yeah, so I don't know, quick side story here, but I'm sure Leon, we've worked together at Geekdom. That's where we met. John Shotwell from Packapit. Him and I went through an incubator and accelerator, or should I say pre-accelerator at Geekdom. He was telling me how, before he started the product that is Packapit, he actually worked at a restaurant, I believe in New York, and okay, so my bad. He actually owned a restaurant. He also worked at Apple, so he's a very smart guy. He was telling me how in that same restaurant that he owned, there was a guy who would go on a weekly or maybe daily basis. He would have lunch there, and then he would meet with random people. They would come in there and then just talk to him, sit down at a booth, and then leave. Well, they were actually making Bitcoin transfers, like transactions, and back when Bitcoin was like worth a couple of dollars too. So John had the opportunity to buy Bitcoin at like a couple of dollars, and when we talked, Bitcoin was like at 50,000 at the time. So it's gone up since over 100. So it's kind of crazy how the world circles.
There's so many stories of people like that. Like, oh, I didn't want to buy it. It was I believe John told me that it was like $13. At the time, and he's like,
gosh.
I don't, he's running a restaurant. He's like, I razor thin margins. I don't need to spend it on some, weird digital currency that he didn't quite understand. And
I think that's what it is.
It is a weird thing to think of, and I still have a hard time wrapping my head around this sometimes. Like stable coins. I was like, what is it? Like, why do you need a stable coin? But in the view of it being like, an upgrade to the old infrastructure that some banks still use FTP files to transfer money between each other. They put it in a file and they're like, this is what it is. It's crazy to think stable coins could solve a majority of things. It's also Big Brother in many ways. Like they're able to audit it, they're able to stop fraud, they're able to stop chargebacks. Like we'll talk about that a little bit in even the credit card world. But the crypto stuff and Coinbase is going to be the center of all of it. It's it's just like when you think Apple, you think the modern cell phone and you think Steve Jobs. I think at some point 20, 30 years later, when this is just a common thing, we're going to think Coinbase and Brian Armstrong is going to be the person who shepherded all of this along.
Yeah, I think whenever you look at any interviews or press with Brian Armstrong, the CEO of Coinbase, he always goes back to referring to the Bitcoin white paper as part of what influenced him to start Coinbase, as well as to change his worldviews on the way the financial system works, which goes on par with him starting Coinbase. So, very smart guy, very, very interesting stuff. All of this, the way Bitcoin came up to be, and to see where we are now. But more into the story. So you can read this article as well. We'll leave it in the description again. 3 things that it covers that I think kind of highlight a lot of what was talked about here in the State of Crypto Summit. First, talked about stablecoins are facilitating faster money movement, updating outdated financial systems, which is kind of something that you mentioned earlier. as far as moving money. And then crypto helps address the top financial pain points facing SMBs. 80% of SMBs say crypto can help solve at least one of the pain points their business faces, up from 68% a year ago in 2024. You can read more on this, and then it also highlighted the Genius Act, which we already did earlier, where crypto is becoming the talking point in the Senate floor, and our representatives in the U.S. are actually putting in some work as far as creating some much needed clarity as far as where the regulations go. So interesting stuff. Two big other things that came out of this State of Crypto Summit. First is the Shopify partnership with Coinbase. Also, Coinbase partnered with Stripe as well for just incorporating stablecoin payments. So if you have some USDC, maybe some Tether, some USDT on your Coinbase wallet, you're going to be able to use it now to buy goods and services on Shopify. So that's pretty huge. Oh, with Stripe.
It's like the first mass adoption of stable coins. I think that a majority of people will see. Like, I believe like everybody in the world at some point touches a Shopify site within a month. Like, if you buy something online, you're going to touch a Shopify site. Like, you're now going to see stablecoin as an option to pay, and everyone's going to be conditioned as like, oh, hey, this is a payment method. And I think that's the first step to mass adoption.
Yeah, so I just did a query here, prompt on ChatGPT, and I asked it, how many stores online use Shopify today? And as of Q2 2025, built with based on analysis estimate around 2.58 million live Shopify stores currently operating, representing a 6% year over year increase. So I'm not sure what it looked like every other year, but it seems to be by a 6% increase.
It's huge. I think they take up like 3-4% of the internet, and
I was looking for a number like that.
Portion of the internet.
Shit, I mean, we're like what, almost, if not 8 billion people worldwide. So
Yeah, I don't know how many people are online, but I know like WordPress powers about 50% of all websites. Like 3-4% is huge.
Yeah, so Shopify, everyone is going to be able to pay with USDC. So I think this is a step in the right direction as far as allowing normal normies, for lack of a better word, to at least be aware of what crypto is if they already aren't. So that's pretty much it as far as Shopify goes with Coinbase. One more thing I want to show here before I go into the last point for Coinbase Crypto Summit is there's this video that I'll share as well. We will show here in the link below, as a link below in the description. I feel like I've been talking a lot, and sometimes my brain just stops functioning as far as talking. But it's actually the entire live video that covers the State of Crypto Summit. And there's a couple of segments here where, as of this recording here, we're seeing the founder and CEO of Circle, the provider of USDC. I forgot what his name is, but he's right here, and he's right next with Brian Armstrong, and a lot of what they're talking about is kind of reminiscing when they started, when the founder of Circle started Circle in 2013, and they were having a hard time getting any bank to provide them a bank loan for their business because they weren't sure if crypto was even a legal thing. This was around 2013 when I guess Ross Ulbricht was trending with Bitcoin and Silk Road. He did get convicted back in 2015, so 2013 is when he got arrested. So maybe the timeline isn't so different because of that. But they were talking about how much has Bitcoin and just the overall sentiment around it is, and it's improved so much. And he is very proud of what he's done as far as with Circle. But Brian Armstrong was also talking in this small clip here in the interview, how he started Coinbase, how he was very inspired by the Bitcoin white paper. So yeah, it's really cool to see, and it kind of gives us a vision of the past, but also of what could be in the future. So, I mean, I like this video. We'll leave it here in the link as well. It's the entire video as well for the summit. But I want to save the best for last here, and that's with credit card adoption, or credit cards adopting Bitcoin to some capacity. So, I think for me, what inspired it before the crypto summit was this video from Daniel Sparks. We'll leave a description. We'll leave a link to the description as well. So he talked about how credit cards with, particularly Amex and some other more established cards have been pulling back on their rewards, some on their cashback and benefits, because everyone already has credit cards and people are not paying back their balances. So the carriers of the credit cards are actually the ones kind of suffering. They do actually make a lot of their money with just a balance statement, just in interest as well. But generally, we live in not financial good times, for lack of a better word. I don't know if that's how we describe it, but
it's a crunch. It's a credit crunch, but also
yeah.
So like a small thing on that, like every credit card company is kind of different on how they make their money. So for example, American Express is all about transaction volume. They get most of their money from just you swiping the card. It's a charge card, so you don't always like carry a balance. Some people do have credit options on American Express, but like most people don't understand, like there is no spending limit on an American Express card. Like you could go, and if you make enough money and you spend enough generally on an Amex, you could buy a whole car on it. Like,
oh yeah,
just straight up. But like, American figures for credit cards too. It's like, I think the average American owes like $7,000 in debt to credit cards. And I believe that there's somewhere in the trillions. Like we have the most credit card debt right now than ever. And yeah, more and more, like, people are getting smart to like the credit card point systems. Like there is an argument that, if you use a credit card in grocery stores, who pays for all of those fees? Because a credit card is a higher fee than a debit card. It's somebody who's financially struggling. So there is some like equality conversations around that, and it is going to decimate the fees, which is going to decimate the rewards market. If these bills pass in Congress, and there's a lot of conversation around it. The points guy has some really great info. This video is a good example of what's happening. But credit cards are changing, and they're changing very quickly, because not only do Americans carry way too much debt, just like the American government carries way too much debt, but most people don't know how to use a credit card. They kind of use it as free money. They overspend. They do that. It's an interesting model, and they all offer points, and points are being devalued more and more. So it's a shifting game, very fast and very hard shifting game.
Yeah, I agree. So I think Gemini credit card came out in 2021, and it was the first one to. Well, actually, I think they relaunched their credit card as far as the rewards program.
Wasn't it Crypto.com that had some of the first credit cards?
Yes, it did, but that one was not as popular, because depending on how much crypto you held in the wallet or in their app, you would get more rewards. So if you held more of their token called Cronus or CRO, you would get more rewards, so more cash back and such. And then Gemini right now actually enables Bitcoin instead of points with rewards. But you made a very interesting point earlier, saying that the people of the U.S. at least carry a large debt in credit cards alone, like individuals being upwards at 7,000. So as of March 31st of this year, it has been estimated that there's a total outstanding credit card balance of 1.182 trillion, and it's down about 2.4% from 1.211 trillion at the end of quarter 4 2024. So
yeah, that's a huge risk for these credit card companies too. Like,
it is.
If the economy tanks further than what it is right now, like, they have a really high probability that unsecured debt is going to go in default first. Like, and an unsecured debt is something that you can't go repossess something. So if you have a car, it's secured by the car. If you have a home, it's secured by the home. credit card is a risky, and that's why, a lot of people pay 22, 25, 30% for credit cards, because like the credit cards company's recourse is to sue you in court, maybe get a judgment, but what's stopping you? So there's also a ton of fraud in credit cards. There's also a ton of like chargeback, merchant problems. The fees are high. Amex charges 3.4%. Like credit cards are largely broken.
Visa, which is one of the major credit card providers, they are adopting stablecoins. So there's this article that we will leave in the description as well, where it talks about empowering the future of payments with stablecoins. So they kind of highlight here how they're going to use stablecoins on their credit cards now. So that's kind of big. Visa is the number 2 largest provider for credit cards worldwide, if not the number 1. And I think right after that would be MasterCard.
Yeah.
So
and when you look at it, credit cards, again, the financial system that we have today is largely built in the 50s, post World War II.
Yeah.
So there's delays in settlements. You swipe a card today, 2 to 5 days later, the payment actually clears. There's high interchange and processing fees. Amex charges 3.4. I believe these others charge about 2.8. To the merchant, 2.9 plus something. There's frequent fraud and there's frequent chargebacks. So that's a big thing. And then you've got choke points from these banks that are processing everything. So if they can update the rails and make stablecoins a thing, it's instant settlement, global by default. You don't have foreign transaction fees.
Yeah.
To the U.S. government's joy, I'm sure. U.S. dollars, USDC backed dollars are going to be the global payment rail, essentially all over the world. And then you've got transparent and audible, little big brother here, but you're now able to say, was that person, was that transaction fraud? Okay, let's flag all of these, go look at it, what happened. It should cut down on fraud. And then, and this is the really interesting part for me that I just don't really, understand quite yet, is it's going to be near zero fees. So if there's near zero fees, how do you offer, 4% back, on a card still? You're going to have a hard time, even if it's Bitcoin. How do you do? Do you charge monthly fees for the credit card? Do you have a yearly fee? Do you do all of that? What is it?
Yeah, it's a really good point, because before talking to you about it this week, or before us getting here on the segment this week, I actually talked to you about credit cards and stuff, and you were telling me how, if they're cutting back on their transaction fees, then their rewards are also going to come down or scale down as well, because it's something that the credit card providers are going to have to leverage, which is part of the reason why they charge a lot in their transaction fees, which I didn't even think about. But for Bitcoin, it might be different. Gemini is more of a exchange than it is a bank or a financial system. However, if you're an exchange where you can buy Bitcoin directly through them, that does subject you to complying with the SEC, FinCEN, and other, providers, other lawmakers here in the U.S. or agencies. So them providing Bitcoin, I don't think it's FDIC insured yet, but in the near future we might see some form of FDIC insurance, which I think could help consumers a lot. But I'm not sure if that could also help the business as well, as far as anything were to happen.
But I guess that's just for the money that they're housing. If they fail, they fail. But for a credit card, I guess it doesn't matter.
Yeah.
If they fail, they fail.
Yeah, I mean,
there's no FDIC insurance for brokerage accounts. There's no FDIC insurance for credit card companies per se. They carry their own insurance.
Yeah, I agree. So we'll see what happens. Gemini Bitcoin card was actually really big in Bitcoin 2025. They used two Tesla Cybertrucks to make this promotion. So it was actually blowing up on Twitter. This is not an endorsement to them. They're just pretty big. Though. Incredible marketing for sure. In fact, I think because they launched this model in Bitcoin 2025, it actually helped them a lot with traffic, with signups and everything. So they're doing something right here. So the last point that we'll cover here for Coinbase Crypto Summit is Coinbase is actually releasing its own credit card. and it's called the Coinbase One card, which actually I think it's a very beautiful card because it's black. I think they're inspired by Amex, Centaurian Black. I think that's the black one from Amex. They users who sign up earn 4% on Bitcoin on every purchase. But the card itself is like stainless steel, which I think most use stainless metal or just metal cards. I think Apple uses titanium, which is a really beautiful card. So if you look at it, it's got all this text, but it's actually the Genesis block from Bitcoin, like the Genesis block being the first ever transaction or block in the ledger that is the blockchain, the output of it. And I think it's a very memorable, Easter egg, if you will, like little reference here they made in behalf of Bitcoin. So I don't know if you've seen this yet, Leon, but so maybe you may not see it here on my screen, but on the right hand side of the card, you see the name Coinbase, and below it, this is actually a remark that was made inside of the Genesis block itself by Bitcoin. It says, and this was backwards in the Genesis block, but it's been flipped here for convenience. It says, the Times, January 3rd, 2009, Chancellor on brink of second bailout for banks. So it references a lot to the bank bailout that happened in 2008 recession, because this is the whole reason why Bitcoin existed, because the recession back in 2008, it disrupted the markets and Bitcoin was born.
Yeah,
and I think
it's kind of the irony of it too is the Bitcoin is ushering in a new financial system. It's not an alternate system that everybody thought it would be, like free in there. This is still a system that is going to be highly regulated and brought into the normal financial system. Like the new thing is Bitcoin and underlying crypto is going to become the new system. So very fascinating to see, the roots of where it came from, of disrupting a financial system to becoming and replacing it in a somewhat undisruptive method. Like no big companies are failing, no changes. Like it's just companies are adopting it versus, like before you had Blockbuster go out of business to, bring Netflix, to become popular. I don't think you're going to really see, Visa go out of business because crypto came in. They're going to adopt it as it's an infrastructure. Really, crypto is becoming the infrastructure of our financial system worldwide.
I think that's what it was originally meant to be. Bitcoin itself is more of a reserve currency, which Brian Armstrong highlighted in the State of Crypto, and I couldn't agree more. But the underlying tech being the blockchain, that is a visual, transparent ledger. You can see all the transactions. You can move money faster than you can with the Swift network. So it really is underlying infrastructure.
Yeah, my only gripe with this card is it's an American Express card, but it's like not an American Express Express card where you get all the benefits and all of that from American Express. You do get the fraud protection. Well, I guess you do get the fraud protection. You do get like discounts at the partners. I don't know if you get travel protections or the things, but you will get accepted. But if you go out of the country, out of the United States, like American Express is a little less accepted unless you're in a big tourist hub. And then oftentimes when you're in a tourist hub, they'll have like a Visa, MasterCard like POS, and then you'll have a Amex POS, and you just got to tell them what you're using. But it's credit cards and financial flexing is always a thing. So this card is symbolic to everybody. Like it positions it as a Web3 native user. It's part of Coinbase's broader ecosystem with its base DeFi tools and NFTs and everything. But like the only thing is you're not spending crypto per se. Like they're not really disrupting anything there right now. You're just earning crypto. You're not using it to pay for it. And I believe you collect it in USDC. Maybe I think you can collect your rewards in ETH too, or Bitcoin. But I think it's all USDC, right?
As far as rewards, I'm not entirely sure. You can look at all the benefits here, but you do need to be a subscribed member to, use this card and to think of it like an annual fee,
Yeah,
which
it's
it's
a
pretty common.
4.5 boosted USDC rewards, and then you get
Okay, yeah.
more staking rewards, and then you get transaction credits. That's actually not bad. Like overall, the wallet's pretty, or the credit card's pretty cool. Like I would love to get it. I probably won't. Like I don't pay for Coinbase One, so it's
Yeah.
a good reward for something that's becoming. Coinbase is becoming your new age bank. Wells Fargo does this where you pay Wells Fargo a yearly fee and all this. They're just doing this as like oh hey, you have our membership, now you get a card, now you can bank with them more and more because stable coins are going to become the payment rails. And if you can just interchange everywhere stable coins are accepted, you can accept US dollars. Like it's soon going to be credit, debit, or stable coin. That's going to be the question that everyone asks. What's your payment method? Debit, credit, or stable coin? Or cash?
Oh, yeah.
Like that's going to be the new ask at every store that you go to.
I agree. That's gonna be kind of exciting. One day you're like, oh, I need enough USDC, so I'm gonna sell my fart coin to buy groceries or something.
Yeah,
It's gonna
I
be
want
funny.
a fart coin rewards credit card. Every time I
Yeah.
swipe, it makes a fart noise, and I get some fart coin.
That'd be funny. But yeah, interesting times we live in, and in light of the 2008 recession, I think it was a recession. I keep saying recession, but
It's called the Great Recession.
okay, yeah.
It
So
was
2008.
like recessions have an economic like there is negative growth in the economy. There was negative growth in the economy. Granted,
Yeah.
the Biden administration changed the terms of that, and I'm sure the Trump administration will change the definitions of what is a recession. But 2008 was the biggest recession that I believe the United States had outside of like wars and the Great Depression.
That's a good point. Yeah. So in light of the recession, we had Bitcoin, and now we have credit cards with Bitcoin rewards or USDC rewards, and maybe in the future we'll have Fartcoin rewards. So we'll see what happens. So yeah, this has pretty much been everything we've had to cover for Social Ledger Report today for this week. So stay in touch for next week. Again, like this video if you liked it, dislike it if you dislike it, subscribe if you want to stay up to date, and share it to your friends.